Is it time to buy or sell the Netherlands stock market ETF? First off, read this disclaimer carefully. And do your good deed of the day by liking and subscribing. So, we have seen, a pretty substantial sell-off in the stock markets. On average, they are down minus 21% away from the 52-week highs, which is, the definition of a bear market. When we go to Netherlands, we find it here. I classify it as Middle Europe, 5% here from the 52-week low, but minus 31% away from the highs, so pretty substantially in bear market territory. So let's focus a bit on a key moving average, the red 200-week moving average. As I think you can see very clearly yourself, very surgical resistance level. So it was very shortable back then. When it became support, it really emboldened the bulls. So the 200-week moving average, it matters, in red. Here we fall below it. That is when we see panic selling. We do attempt to get above it a couple times. So this was, very tradable at the time. But you need to also stay above it. When we finally got above it again, the bulls got ambitious. And so it obviously is a moving average that matters. The interesting thing now is that the bulls are ferociously, passionately trying to turn it into a support level. So we have had, 3 weeks where we have, seen the bulls very, very strongly make sure that we do not close below that moving average. As we saw in the history of this ETF, closing below the 200-week moving average, it really emboldens the bears. So the bulls do not want that to happen. So far, we have not seen a rally. But the last 3 weeks, they do show us that there are bulls protecting this level. So it's interesting. And even if this is the worst bear market of all time, it is completely to be expected to have, these attempted recovery rallies during such a bear market. That is very normal. The big thing that differentiates a bear market from a bull market is that during a bear market, even though you do have the multi-month rallies, even they fail at resistance levels. So in the same sense, in the opposite sense, that when you have a bull market, as moving out long-term moving averages is where you see support and great entry opportunities. In a bear market, meeting resistance at a key moving average is where you have a very good opportunity to get out of bullish positions and add to your short positions. But yeah, basically, I expect the bulls to do something a bit more ambitious at this moving average. But it is certainly an omen that over the last 3 weeks, they have only been able to protect it. That is troubling. Looking here at the daily data points, we are below a lot of moving averages, and this purple 20-day moving average, it is a level that the bears add to their short positions. The problem with this current setup on the weeklies is that I don't feel comfortable adding to any kind of short positions, given that we have already seen a very substantial pullback. Also, looking at RSI, we are at a level that has triggered many bounces, but also long-term recoveries for this ETF. We also are at a very extreme reading on the MACD. Last time we were this low was during the global financial crisis. And if we go all the way back here to see what happened last time we had that reading, so let's just go back here. So this is it. So here you do have this complete sell-off. Then we had, 1, 2, 3 strong, attempted, basically back here the bulls tried to form, key lows. but the ultimate low came later in March 2009. But if we measure this rally here as an example, it was all of a sudden 25%. And at the time, when the stock market index goes up 25%, I guarantee you, if you have high beta short positions, they will go up very substantially. So yeah, after major sell-offs, that is when it gets more and more dangerous to be like a very aggressive bear, similar to how it is very dangerous after a very protracted rally to be a very aggressive bull. If you look at the chart like here, it looks extremely bullish, and you had people who were like, oh, the stock market is going to the moon because of inflation and blah blah blah. Well, that was the worst time to turn into a pig. Looking here at the daily data points, yeah, so we do have some low-ish readings on quite a few indicators, but we don't have like extreme buy readings. So we're not. So the problem is that we have been even more oversold during some of the previous sell-offs in these ETFs. So I think that the key part here of this thesis is 200 VMA support, but I will add a question mark, because while we do have support, we need more. We need to actually see the line start to go up. The thing is that when I look at this chart from the perspective of a bear, I would feel uncomfortable. I just would, given that we have tested, this support level quite a few times. And it is very clear that there are some forces in the market just pushing and pushing money into this ETF to prevent the break. So basically, as long as this moving average holds, I will lean bullish. If it were to break, then of course it is out the window and this 4 disappears. Let's look at the seasonality for the Netherlands ETF. So to the right here in green over the last 5 years, blue over the last 7, and red over the last 10 years, the seasonality is overall bullish. Looking to the left over the last 5 years, we do see that May is actually a weak month. That is an issue. Over the last 10 years, May does close higher 70% of the time. That is good, but June is the weakest month. Over the last 20 years, then we do see that May closes higher 55% of the time, but on average it is flat. There's nothing happening in May. Then June is the weakest month. July is one of the stronger months, but that is, quite off into the future. So this is why it is so important to combine the average performance to the right with these to the left here, where we get, because to the left here we get the percentage of close, the percentage of times we do close higher than we opened, but we also get the average data. So I do think that it's a bit more informative here to the left, but it's more tricky to visualize. While there were some bullish signs in terms of the seasonality, I think I will give the bulls a mere 1. Overall, I think the seasonality here is such a mess that it can benefit the bulls or the bears. So that means that technicals become even more important for this ETF. Let's look a bit at the fundamentals. So I am comparing the Netherlands ETF EWN with the S&P 500. Yeah, or maybe I should compare it with the VGK, because that is the Europe ETF. I think I will do that. I compare it with the VGK. Okay, so let's go here to performance. Year to date, Netherlands is down minus 26%, minus 16% here. So a whopping 10% more. so that is significant. The dividend yield is not that good, 0.87%, and you get a 3% yield here for the VGK. That's good, well, better. Looking here at beta, slightly higher for Netherlands, and price earnings is approaching the double. Okay, looking at the holdings, you see that there's 1,300 plus for the Europe ETF, but only 60 holdings for Netherlands. So let's scroll a bit down here and get the sector breakdown. Yeah, leans heavily towards technology and finance. So it makes a lot of sense that people that are considering to look at the Netherlands ETF will look at the Europe ETF, and those who are into fundamentals will feel better about the VGK, which means that they are more likely to push the EWN aside. So I do think I will give this -3 here in favor of the bears. Here are some long-term correlations. 95% with the S&P 500 and 95% with VGK, the Europe stock market ETF. Then 17% with the 10-year yield, and then we do have, well, as a matter of fact, let's actually look at crude oil, and let's look at natural gas, because the huge topic in Europe now is that in order to to stick it to Russia, there are a bunch of energy boycotts. But that is not without costs for Europe. And when you look at the forex market, you see that the Russian ruble is crushing the dollar, the euro, you name it. So yeah, it's going to be very interesting in Europe going forward. So we do see that there's a 58% positive correlation between Netherlands and both in regards to crude oil and natural gas. Looking at daily data points, 84% positive with the S&P 500, 98% with VGK, okay, so now it gets interesting with the correlations. So -85% here with crude oil, and -59-ish% with natural gas. Yeah, so definitively the geopolitical situation is manifesting itself very strongly here in the correlations. So given that there's currently a very negative correlation between Netherlands and crude oil, it means that they do move opposite each other. And that does mean, based purely on the correlations, that if we were to see weakness in crude oil, or at least a pullback, that could then be beneficial, bullish to the Netherlands ETF. So what we do see here in the crude oil futures is that after this very strong move, it has been consolidating a bit sideways. When we go here to the daily data points, we do see something a bit rounding-ish, bottom-ish. I do think I see some time cycles very short, but time cycles nonetheless. At least recently we have had these, very, short time cycles. It is possible that we could have a little bit of a pullback. Here is the relationship between the Netherlands and crude oil futures. The chart is very messed up by this, lockdown price anomaly that we had in crude oil. So if we zoom in a bit here, we do see that we have gone from this very clear downtrend to now it is moving a bit more sideways. So there's something slightly double bottom-ish here. Not like a roaring double bottom, but we do see that other times, like here, as an example, we did get a bit of a rally, a bit double bottom-ish, a bit of a rally, meaning we got a period where the Netherlands stock market outperformed crude oil. This looks also a bit time cycle-ish. Yeah, not like super clean time cycles, but a bit clean-ish. Yeah, maybe there's a rising phase around the corner. Let's look a bit here at the seasonality, like that. So over the last 5 years here in green, usually the relationship is very flattish. Over the last 7 years here in blue, then towards later July, Netherlands tends to outperform crude oil, just purely based on the seasonality. Okay, so let's look also in the red over the last 10 years. Yeah, there's something bullish here about the seasonality, which peaks around 21st of July. Let's look at the Netherlands against the VGK. EWN slash VGK. No, VGK, like that, which is Europe. Yeah, so Netherlands, it outperformed the Europe ETF for quite some time. So it peaked around September 2021. And if we look here at RSI, it is relatively rare for Netherlands to underperform the VGK ETF to this an extent. So then you have to beg the question: okay, is it then likely that the average relationship over the last decades will that come back? It sounds rather probable. Of course, obviously, there's no guarantee. There could be some deeper reasons why Netherlands is underperforming. Looking at the seasonality, it is bullish in favor here of Netherlands. So I do think in terms of relative performance, there's something a bit interesting happening here. Not like extremely bullish, but bullish nonetheless. We do end up with a 1.3, so the data is more favorable of bullish trade ideas than bearish. A very, very important part of this bullish thesis is that 200 weekly moving average support, it must hold. If the bears are finally able to crash that, to slice through it, that would be bad. Whenever you are considering making a move in the market, you have to ask the question, what is most risky? Is it most risky to go long, bullish, or short, bearish? And I think that in this situation, with these readings on the technicals, seasonality, fundamentals, relative performance, I think there's more reasons to be concerned if you are a bear. Similar to how we saw that the bulls should have been very concerned when the Netherlands ETF got extremely overbought, during that, super strong rally before the peak. That is when it was very dumb to, get even more bearish. So I think that we just have a bit of an opposite situation at this point. Sure, it could very well be that in 2023, that we have an ongoing bear market in the Netherlands, but I think that there will be some would-be attempted / wannabe recoveries between our current time and that.